Hello, everybody. Welcome back to the Flow Show. He's Steve Straza. I'm Sean McLaughlin. Straza, man, we had a week off. How you doing, buddy?
I'm doing great, man. It's a fast market. There's a lot going on, but bull markets are more fun. I think that's the main takeaway right now.
Bull markets are more fun. I mean, I heard you talking on the morning show this morning that you're probably heading to Miami for a crypto conference. I mean, that's going to be a fun bull market party.
I mean, wouldn't you? If you're not going to crypto conferences in this environment, when are you ever going to crypto conferences? So,
If I could drive to Miami, I would.
I mean, bro, you should think about it. Maybe we can like overlap it with a company event. I don't know, but it's a sight to see. And I'm actually doing sentiment analysis when I go to these things. I'm working.
As you should, as you should. All right. So you told me before we went live that you had a bunch of stuff to talk about. So maybe we should just jump right in.
So I have a list for you because we talk about on the show all the time how options give us options. Bull markets also give us a growing list of options. In this environment, there's a lot of focus on, oh, the semiconductors aren't working anymore. What happened to NVIDIA, this and that, the Mag 7s. But not enough people are talking about everything else that has started working, right? So I think right now, as a stock picker, we have as many opportunities, bullish chart patterns, bullish, pattern breakouts as we've had this whole cycle. So I made you a list, but first I just want to talk about like the price action that's going on. So let's just look at the indexes. This is the S&P 500. This is the election day gap right here. Okay. This is the election gap VWAP. We tested it, we held, we tested it, we held, then we blasted through it, then we gapped down below it, and then look at where we winded up, right? Just a very clean level. And everybody's saying, who I'm talking to, that we have to go and fill this gap. We don't have to do anything. It's a bull market, right? So people are saying, oh, let's fully fill the election gap, and then let's buy stocks. The market never does what's obvious. So if everybody's calling for some sort of gap fill, I think you probably want to look the other way and say, this is a pretty big tactical polarity zone. If stocks dug in here in the middle of a primary uptrend, it would make sense. And we can say this for just about all of the major averages. We could do the NASDAQ 100 next. It's right at the 161.8. Look at Russell 2000, IWM, right? It doesn't undo the election gains that we've pinged right back to such a logical support level that's been tested 1, 2, 3 times since just the summer, right? And now we're flipping that former resistance into support. So I think the current level where we're at right now, from a broader market perspective, is a very logical place to establish a tradable low and bounce from here. So I think we should be looking for long opportunities. I brought a full list of them.
Ooh, a full list. Let's see. Let's hear it.
So you let me know. You stop me when something sounds interesting.
Okay.
Nuclear leaps. So nuclear leaps. What is he talking about? Nuclear leaps. I'm talking about
Or you
uranium.
told me to stop you. I'm going to stop you right away.
Great. I mean, I could keep going or I could not because I
I,
love
I,
all of,
I'm
yeah.
all, I'm only stopping you because first of all, I love this idea,
Okay.
but I'm already positioned long leaps in nuclear. I'm doing it via CCJ.
Great. So we check that box. Okay. I'm
Check that
Sean.
box.
We check that box. Sean's talking about how he's long CCJ. I mean, this is the industry leader. This is probably the vehicle of choice. And this is the base that Sean is talking about being long and being long leaps because this is a leap pattern. Okay. Next. Speculative tech bases. Speculative tech base breakouts. So what do those look like? They look like the worst stocks in the market. I mean, it's hard to call them the worst stocks in the market right now. They look the best from an actionable standpoint, right? So here's ARK. All of the other ARK funds look the same way, pretty much except for Genomics. This is the VWAP from the prior cycle highs. We're taking it out. It's like it has all of the hallmark characteristics that you want to see in a primary trend reversal pattern. Okay, next. Energy. Everybody's sleeping on energy. Like, of all of the post-election moves, a lot of stuff's being talked about, whether it's biotechs or the banks or the cryptos. Nobody's talking about energy, right? So I think there is something there. There are some nice setups. Look at this beautiful chart, so symmetrical. Okay. Index exposure. I think there are simple trades to be made here at the levels I was just talking about. In other words, IWM, primary trend reversal, breaking out of a base. Okay, path of least resistance is higher, has a huge momentum thrust higher, right? And then just a really textbook correction. And it looks like buyers are showing up, right, and digging in right at this logical support level. I think you get long IWM calls right here on a short-term basis, and they could pay really well. Sean, next is meme stocks. Meme stocks.
Okay.
Have you heard of this?
I've heard of them. The granddaddy of them all, GameStop.
I'm long GameStop. I'm long AMC. I'm long BlackBerry. I'm long Chewy. People
Hmm.
bring me new meme stocks like every day. I don't just buy them blindly. But I think this is the place to be, right? In the best bull markets, you actually want to own the worst stocks. It's crazy. It's crazy. It's hard for people to understand, but it happened in 2017. It happened in 2020. You didn't want to be in the NASDAQ 100. You want to own the ARK stocks. You want to own the new IPOs. You want to own the stuff that people tell you are terrible businesses and will never see these valuations again. It happens every bull cycle. I think we're there. I think GameStop is on the cusp of absolutely ripping. I think Roaring Kitty probably tweets by this weekend. Okay, moving on. Short squeeze names, Sean, they just keep working. Whether it's Zoom or Peloton or the like the short names, barring solar energy and maybe pot stocks. Here's one: Zim Integrated Shipping. I think you might already be in it, but just
I am not. No.
absolutely textbook trend reversal, massive short interest. This is a brand new uptrend underway. Again, we have that VWAP anchored from the prior cycle highs. It looks just like ARK. Like this is a pattern that we want to buy over and over and over again. I like the heavy short interest names right now. We'll move along down the line. Healthcare puts. Hold on now.
Ooh.
Hear me out. I'm not talking about buying puts, Sean. Look at this range. I remember selling puts here in October of last year. Okay. Now we break out of the range, and I think there's a really, really overdone retest happening right now. It's the middle of a bull market. I don't expect this large cap sector spider to break down and break back into its former range. Biotech's already moved there. But guess what? Biotech, the selling in biotech is so overdone at this point. I think XLV digs in here. You can make a bull market bet, sell the puts. You got a really, really clear level of support. I got one more.
Um,
You don't like my ideas. What's up?
No, no, actually, I like a lot of these ideas. With the XLV, I like this idea also, but this one for me would be a wait and see. I would like to see it close above a previous day's close first before I got interested, and then use that low as the level, the
I
risk
totally get
management
that.
level.
I think that's usually best practice when you're trying to
Right.
sell puts, right? You don't
So,
sell puts on a red candle like that. I have to
right.
read that. So I'm totally with you. The last one, if you really, really want to put yourself out there, right? This is for the risk takers. Sean, you pinged me earlier about V1 Grab Holdings. If you don't know about this stock, get to know about this stock. This is the Uber of Southeast Asia, right? So they're doing the same things as Uber, which has proven itself as like, just a tremendous growth story here in the United States. But they're doing the same thing as Uber, only in a region of the world that has a growth rate far, 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 far higher than we do here in the United States. So I love this clean base breakout, right? Rounding bottom, primary trend reversal. It's go time in the grab. Also, our other favorite Southeast Asia vehicle has been C Limited. Sean and I learned a lot about both of these companies. I can't say that we actually ordered things and used C Limited as a customer. We did not. We should have. That would have been cool. We
Yeah.
could have. But we did use Grab. Sean and I took a notorious Grab ride. We don't have to revisit it here, but it was quite the experience, right? It was quite the experience. I left my, I don't know if you remember, but in Kuala Lumpur, this was after the Singapore situation. We got left on the street by Grab, but we still love the stock because it's all about the charts. In Kuala Lumpur, I left my backpack at lunch, like that day when we ate with all the professors and those people.
Yeah.
I had to take a Grab back. It's not like Uber. Like I was sitting on the street waiting for like 30 minutes, but like it's also just very different out there. So this is a much younger company, right? This is not some sort of like mature growth story. No, they're just getting started. So this is also speculative growth, but it's speculative growth ex-US. So I love this. And I think, Sean, that taking this theme one step further, when Southeast Asia works, these countries all run with and run on China, right? So I'm looking at the charts in China and saying it doesn't look great. And it's almost like, you just said about healthcare. Let's get one green candle first. But I can't help but look at China right now with the price action in some of these Southeast Asian stocks, like we just talked about, the C Limited, the Grab, and think China's got to get in gear here and hook higher. So I think you might already have exposure, but China is the last thing that is on my mind. I could keep going, but I think maybe you should just.
No, you've already given me some good ideas. In fact, there are three that I liked, but I think if I had to pick two, and let's talk them out. I think I hate to even admit this, but I think that GameStop was pretty interesting to me.
This,
Um,
yeah.
the GameStop and then also the Zim, and for two different reasons. So let's talk about GameStop.
So GameStop, I want you to look and tell me what you think. But so I'm in. I'm already in. But damn, man, these calls are expensive, like
They
very
are.
expensive.
They
Um,
are, but I think we could leverage that to our in our favor because I was looking at the out of the money calls that, as you alluded to, are very expensive. But
Crazy.
yeah, so that being said, I'm looking in January options, so shorter term trade than I usually do, right? So 59 days expiration right now. If I wanted to buy the January 30 calls and create a vertical spread selling the 40 calls,
Hmm.
that's a $10 wide spread. I can get it for about a buck 30 right now. That's I feel like that is a really nice price because this
And
the value of that spread could potentially be worth as much as 10 bucks.
yeah, I love that. I think you
Buy it
have
for
to
a
do
buck
that.
28.
So talk about what you want from price action for this trade to have an optimal outcome, so people
Well,
understand.
okay, look, throw anything you know about normal market mechanics out the window, right? This is a meme stock. This is not going to trade on traditional metrics. We know that. That has not changed. So the reason why I'm looking in January is because we have a little bit of a catalyst. I mean, we know that we have the elections out of the way. We know who the president is, but heading into the inauguration, we've got a president who loves to make headlines. We know that. He's going to be talking a lot. And I don't know, there's just something about his whole vibe that I feel like energizes the meme people, the people who
Well,
like to trade
well, hold
stocks
on.
like this.
Let's speak honestly about it. He literally is the largest shareholder in a meme stock.
Right. And
Oh,
let's be even more frank.
PJT is it not a meme stock?
Yeah, and let's be more frank. I mean, if there's anyone in politics who's a bigger pumper and dumper than our incoming president, I can't think of one, right? This guy pumps everything that he's involved in.
Is there
So,
a better insider to follow?
right. So I just feel like there's a potential for some wild activity, and we could position at a very affordable, low risk price, right? We can buy this bull call spread for $1.28. That's our risk. And if some weird stuff happens, and it's been showing signs, right? Like you and I have been talking about GameStop on and off for the last couple of weeks. It's showing signs that there are people getting involved in this name. And moving from $27 where it's at right now to 40, I mean, that can happen in an afternoon. We've seen it before. I'm not saying that's going to happen, but
No, but it's
certainly it could happen
important.
before January, end of January.
Well, it's important in the context of how expensive these calls are, right? Like
Right.
they're priced the way they are for a reason. If I could just take you back real quick before you keep going, Sean, to I don't know, late April, May. This was GameStop. It came out of a multi-year channel after its last like moon phase back in 2020. Right? It came out of a multi-year channel, broke out, and the thing ripped from 10 to 50 on a closing basis, but on a intraday basis, I don't know, 65, 10 to 65 in a matter of 3 weeks.
Yeah. Yeah. So it could do that again. And the fact that there's so much premium at that 40 strike,
Mm-hmm.
that plays in our favor if we're doing a vertical spread, because that means we're selling those expensive out of the money calls. I don't know. I feel like this has a really good chance. I mean, we don't need to make a five bagger on this, but even if we just double our money, I mean, I feel like our odds are pretty good. We pay $1.30 for it. We could sell it for 260 if we want. I feel like that's a good trade. And if you want to be conservative risk management, you could get out of this and stop out if the spread loses 50%. I mean, if you want to. I mean, I don't know. At priced at a buck 30, I think you just kind of let it ride, right? Let's see what happens because the spike could happen at any moment, right? It could happen in a day.
Absolutely. And do you think like it makes sense to buy that extra time for something like this, Sean? I always wonder, like, if you go out to January right away, that's fine, right? And you give something like this, a trend like this, or a theme like this, more time to actually play out. Maybe Roaring Kitty decides to tweet, he waits until Christmas Eve. I don't know, right? And then we'd be glad that we bought the Januaries. However, if he tweets on Sunday, we're going to wish that we bought, I don't know, like the weeklies or the monthlies, right? We're going to wish we had a shorter expiration because we'll make more money. And then what we could always do is come expiration time or theta decay is eating away at our positions, we can roll them. So do you think it makes sense to maybe even go shorter with the plan to roll if you still like the trade?
Well, here's the thing. I'm looking at the December options right now. That
What, the full
same
20s?
that same vertical spread, buying the 30s and selling the 40s.
Yeah. How much?
Um, it costs a dollar. It probably costs you $1.05. So $1.05 to get to December, or $1.20 for January. It's not that much
Nothing.
more expensive, but you got more
Perfect.
time for it to play out.
Great. I'm on board. I'll
Yeah.
put this on right now. I
Okay.
think,
So
yeah, go
I
ahead.
like that trade, but let's also talk. Maybe we do both. I like that trade, but let's talk about the other one that I liked. You talked about Zim. Um, I
This
like
is a
that
hot
setup.
topic. Yeah.
I like that setup, and I feel like we could keep it really simple and just buy calls.
Yeah.
And in this case, I'd like to go further out in time. I'm thinking maybe July.
Yep. They're not
And
cheap, right? They're not cheap. I was looking at them Friday.
they're not cheap, but neither are they extremely expensive. Like, I'm not going to buy an at the money call, but if I were to buy an at the money, that would be a 27 strike July call. I could probably get him for about 425 right now. I don't think that's terrible. I'm not going to buy the at the monies. I'm just saying. I don't think that's a terrible price,
At the money
but
for July?
yeah,
That's
but
crazy.
you could get, if we want to get a little bit more leverage, go something with a little bit of a lower delta. If we look at the July 30s, they have a 43 delta. You can get those for, it's a little bit of a wide bid ask spread. You could probably get a fair fill around $3. Um,
This is one of those stocks that, like, when it goes, the beta is just absolutely incredible. It's gone 4x just this year from its
yeah.
lows in January.
Yeah,
And
I
like,
think,
look at this chart pattern, Sean. Like, this is the pattern. We keep going back to it. We keep buying it. It's the same pattern. This is a really juicy name. It's actually a cyclical name. This is a shipper. This is a cargo shipper, right?
yeah.
Taking out VWAP, completing a, textbook primary trend reversal pattern. Same pattern we've been buying. So, yeah,
Yeah,
all
look, I think I like the July 30s here. The bid-ask spread is a little problematic. And it doesn't mean we can't trade it. It just means that you have to go into it knowing that if the trade doesn't work out, you might have a hard time getting out. And so you need to size your position in a way that, God forbid we take a 100% loss. It's just like any other loss, no big deal.
yeah.
But ideally, we won't take a 100% loss if we're wrong. We can get out eventually at a fair price or at least salvage something. But you just have to be that's the way you combat these options that are a little bit less liquid than you would like them to be. You keep it simple. You don't do a spread. You just do a simple multi-leg or a single leg trade, and you keep your position sizing in check. And then you're a hero and it works. And then if it works, there'll be plenty of liquidity to get out of this,
Right.
or it doesn't, and that's it. But I'm thinking the July 30s. I think we can get them for probably. I mean, if you're patient, you might be able to get them for $3. You might have to pay a little bit more, but I feel like that's a good setup.
So that gives us what, 7 to 8 months, which I think is perfect for this pattern. This is a fresh breakout. Sometimes you get a little bit of like some false moves here, but like we already had it. We had it several times from the summer. Like we test, we test, we test, we false start, we go, we fail, right? And then we're back at it. So I think that's kind of behind us, and July is the perfect time frame. I like this one a lot.
Yeah. So those are the two trades I like.
Oh, yeah.
I'll probably put the GameStop on first. Maybe we'll do that one today.
I remember when
Um,
Carvana looked like this pattern here in Zim.
yeah. All right. So, hey, if you guys follow me on Twitter X, I'll write up a little blog post about the GME trade, and it'll be available to everybody. So check it out. And I think we may do something in this Zim as well. But hey, two great ideas today, Straz. Actually, you had many great ideas, Straz. Some of them I was already in, so
Yeah.
that's why I ignored them. But like you said, man, bull markets give us options. We are definitely in a bull market. We need to act like it, and this little pullback we've seen in the broader market, I feel like is a great opportunity to get in some trades at better prices, or it's slowed the rise of some stocks that we want to get into that we're not in yet. So I
Yeah.
think this is an opportunity.
Should we get like, you remember like the GameStop bumper stickers circa 2020?
Should
I'm
we get
serious.
some?
You never saw that? It was a
I don't
thing.
know.
Oh
I don't
yeah.
know.
It's like a cult. let's get some. I'll put one on my car if you'll put one on yours.
I'm not a bumper sticker on my car kind of guy, but
Yeah, but just to
I'll be
like,
there with you spirit in spirit.
I think just to like pledge our allegiance to the meme stock movement. I'm kidding.
You know what? If this thing rips through 40 and I get full value for my spread, then I'll put the bumper sticker on my car. How's that?
And like all joking aside, yeah, I'm not going to do the bumpers. Maybe I will. Like, who cares? Like, I like to have fun. It's a bull
I've never
market.
been a bumper sticker guy.
Me either. I got none. But all joking aside, I know that it sounds crazy, but trust me, if you're listening, we see this every bull market, and people don't want to believe it every bull market. When you say, oh, these hot IPO stocks, maybe not right now the biotechs, but these speculative growth stocks, these digital payments names, the buy now, pay laters, they are the vehicles. You want to be in them. And people say, no, how could I be in the worst stocks instead of the best stocks? The best stocks have been the leaders this whole cycle. It happened in 2017, it happened in a huge way. ARC 3x the performance of the NASDAQ. It happened again in 2020. ARC 4 or 5x the performance of the NASDAQ 100. It's going to happen again this cycle. Nobody ever wants to hear it. It doesn't make sense. We're humans. We like things that make sense. But right now, you really do. I believe this. I believe this so strongly. You really do want to own the junkiest stocks and be overweight the most speculative groups of the market. And I think this kind of really fits that theme.
Absolutely. Look, forgive this shameless plug.
Do it.
Forgive the
We don't
shameless.
plug. We're not pluggers.
I know, but I mentioned a moment earlier that that I'm going to write up a blog post about this GME trade so that everyone can read it and see how I'm thinking. I just put a link in the YouTube chat. It's the sign up for my free options daily newsletter. You'll this trade will also go out there. So if you're not involved in that, sign up there. You'll get these trade plans like everybody else, and all the other cool stuff that we do out in the daily options note. So there you go. There's my shameless plug.
I love it. Sean has a masterful knack of being aggressive at the right times. And I think this is a moment, or an environment where you want to be leveraging options and you want to be juicing your returns. So,
boom, there it is.
plug.
All right, everybody. This has been the Flow Show. Thanks for tuning in. He's Steve Straza. I'm Sean McLaughlin. We'll be back at it next week. Until then, YOLO responsibly. Look, I stole your line.
It's true. Adios.